Welcome back to another explainer. If there's one sector where India has just genuinely outbuilt, outscaled, and out-innovated the rest of the world, it's got to be fintech. Absolutely. Over the last decade, it's basically been the single biggest success story in Indian tech. But today, we're going to peel back the curtain and look at the fascinating, honestly kind of hidden history behind this massive boom. We're looking at a company that literally built India's entire offline payments infrastructure before the internet was even a major thing in the country. They basically did in a few years what giants like Visa and MasterCard took decades to pull off in the US.
This chart shows the current state of global real-time digital payments. Today, India processes nearly half of all these transactions worldwide, running the most active digital economy on the planet. But in 1998, that infrastructure didn't exist. The Indian economy was powered by physical cash. Credit card penetration sat at a microscopic 0.38%. Back then, non-cash payments meant using dial-up modems like this. They physically occupied a phone line to dial a main server. A single transaction took minutes to clear. If the connection dropped, the entire process restarted from scratch. This created a market gridlock. Banks wanted to issue cards for fee revenue, but didn't want to manage the hardware. Merchants refused the machines because they were unreliable, and consumers defaulted to cash because it was the only predictable way to pay. Two engineering graduates, Rajul Garg and Taran Upadhyaya, chose a different point of entry. They bypassed the traditional retail sector and built a smart card system specifically for fleet operators at petrol pumps. Petrol pumps were high-frequency hubs that needed to track bulk fuel sales. By solving this narrow problem, Pine Labs established a working digital payment network, while the rest of the retail market was still stuck in the analog age. In 2004, a change in leadership brought in a new CEO, Lokveer Kapoor. He realized the authentication software they had built for fuel stations could be applied to the wider retail economy. At the time, modernizing was a headache for shopkeepers. If they wanted to accept cards from multiple banks, they had to clutter their counters with several different machines. Pine Labs solved this by launching Plutus. It used an Android-based operating system and was the first device capable of unifying all banks into a single terminal. Adoption was rapid. Plutus became the standard checkout device for India's emerging retail chains, from department stores to major electronics outlets. By removing the hardware friction from the checkout counter, Pine Labs became the primary gatekeeper for the country's largest consumer brands. But 2016 brought sudden chaos to the economy. The government announced demonetization, invalidating most physical currency and forcing millions to find digital alternatives overnight. Simultaneously, the government rolled out the Unified Payments Interface, or UPI. It introduced a zero MDR policy, allowing customers to pay merchants with no transaction fees at all. This was a direct threat to Pine Labs. Their entire business relied on taking a percentage cut of every card swipe. Now, the government was offering a faster system for free. Rather than fighting the new system, they integrated it. They launched Paper POS, which allowed their existing hardware to generate unified QR codes that supported every UPI app on the market. This saved major retailers from the visual clutter of displaying a dozen different cardboard QR stands on their counters. They also doubled down on software. Since they couldn't survive on transaction fees alone, they began selling high-margin services like instant EMIs, loyalty programs, and business loans directly through the terminal. The UPI rollout forced a permanent shift in the company's strategy. They shifted from being a vendor of card readers to a software-heavy platform that merchants relied on for their daily operations. In 2019, they acquired Quicksilver, a move that gave them control over 90% of the Indian gift card market. Integrating gift card data made the platform even more essential for large merchants. Switching to a competitor now meant a total disruption of their customer retention systems. To escape the crowded Indian fintech space, they exported their software stack to Southeast Asia and the Middle East, finding new growth in markets that were just beginning their digital transitions. By early 2022, Pine Labs reached a valuation of $5 billion, reflecting its status as a diversified global fintech player. This donut chart shows the result of their evolution. Today, hardware rentals only make up 29% of their revenue. The remaining 70% comes from software and services like analytics and promotions. Challenges remain. Newer players like Paytm and PhonePe are moving up from small vendors to challenge Pine Labs in large retail with cheaper native alternatives. But Pine Labs has spent 30 years surviving market shifts. They prove that in a volatile industry, a permanent competitive advantage is a myth. The only way to stay relevant is to continuously evolve alongside the customer.
But as we know, evolution never stops, and honestly, their biggest challenge is happening right now. They were built primarily during the cards era, but today,
Now they face a new wave of competitors that are inherently cheaper and natively built for a UPI-first world. So I'm going to leave you with this provocative question to think about. Can a legacy cards-era giant like Pine Labs continue to outmaneuver natively digital, hyper-fast competitors like Paytm and PhonePe? Let me know your thoughts on how this is all going to play out. Thank you so much for joining me for this explainer, and keep learning.